Hola everybody, this is John here from the Crypto Way giving you a market review video for today, the 19th of June 2018. So, at about 5 p.m. yesterday, we seen a big move up in the market over the space of about 2 hours, with Bitcoin's price going from 6,450 to about 6,850 with a brief retracement. And we essentially have the polar opposite in the market today as compared to yesterday. Yesterday in the top 100 there was hardly any coin in red. Today it's the opposite, nearly all coins are in green. The total market cap is at 292 billion currently, which is about a 4.5% increase day on day. If we scroll down through the top 100, we can see some big gainers, even some in over 10% gains, with Tron at 18% and Ethereum Classic at 11%. We also have Ontology nearing an 11% gain over the last 24 hours as well. So let's go into the technicals and have a closer look at what's happened over the past 24 hours. So we actually had some negative news comes out, which made this even more interesting. The Bank of International Settlements, which is an organization made of 60 central banks, released a report on cryptocurrencies, saying that they don't feel they're scalable, they don't feel they're stable, and they also don't feel like they're a valid form of payment, that they can't be trusted. So even with this negative news coming out, we seen at around 5 p.m. the price of Bitcoin jumping about 400 over the space of a few hours. There was a brief retracement back down to the 6,700 level, and it has traded in a tight range since then. And let's go out to some of the longer time frames to see why this is an even more interesting price point. On the weekly, we can see that we've been in a downward trend since November. Around November, we reached our all-time high, and since then it's been forming lower lows and lower highs, with an all-time low of 2018 around the 6,000 mark. So we're nearing this 6,000 mark now, and this was actually the point back in November where things started to go parabolic, where there was huge price increases, but maybe not such an increase in the underlying fundamentals of cryptocurrencies. So when prices increasing 100%, 200% over the space of just months, there's no way there can be a respective 100%, 200% gain in the underlying value. It just can't change that quickly. So we're around this point now where things really start to get out of hand in terms of the price increases. And also, when we're in a downward trend, typically what happens is that when bad news comes out, the price reacts very badly and has big downward movements. But when good news comes out, it's just shaken off. And the opposite applies when we're in an upward trend. When good news comes out, the price responds really strongly. And when bad news comes out, the price shakes it off. So maybe we could potentially be at a turning point now with the Bank International Settlements report being released yesterday, having a particularly negative tone, which in a downward trending market you would expect some strong reactions. However, this strong reaction wasn't there, so potentially we could be at a turning point in the market. Let's have a look at some of the altcoins and see how they're reacting. So on Ethereum, we're actually seeing over the past few hours some big moves again. Bitcoin has been trading in a tight range, but Ethereum had the big move yesterday around 5 p.m. over the space of a few hours, but also over the last few hours we're seeing further upward movements. And the same is happening in Litecoin. We've seen the big movement followed by Bitcoin around 5 p.m. yesterday. It actually even lasted a bit longer over the space of 3 or 4 hours. We've seen a bit of a bigger retracement, but over the past few hours we've been seeing a move back up to these highs. So let's go in and have a look at this Bank International Settlement report in a bit more detail. So essentially there was 3 points made by the Bank of International Settlements. Number one is that cryptocurrencies aren't going to be scalable. I do believe this is a valid point, as at the moment the electricity consumption of the Bitcoin network alone is bigger than just some countries. However, across the cryptocurrency industry, we have some of the smartest people in the world working on solutions to this. We have alternative consensus algorithms, one being proof of stake. So in proof of work, essentially with your computer, you need to use your computer power to make sure that every transaction is valid. With proof of stake, it's a more scalable solution. Those with tokens, they stake their tokens to validate transactions. And if they are a malicious actor, if they don't perform what is good for the network, they will lose these tokens. So it's an incentive for those who stake their tokens to be good actors. However, there is still some security issues with this that need to be sorted out. There's also the proposition of sidechains. So in Bitcoin, we have the Lightning Network, which is essentially off the main chain. Because it is so computer intensive to use the main chain, these projects are being built on sidechain. However, these are still being developed also. And another proposition on the scalability point of view is sharding. So sharding is using the nodes all over the world and splitting the data, sending it separately to the nodes. Although it sounds like an easy concept to implement, it is seemingly extremely difficult. So it's estimated that will take a long more time before we will be able to implement sharding. On the last 2 points that the Bank of International Settlements made, one was on stability. So they believe that the volatility of the price in cryptocurrencies is too volatile to be adopted mainstream. However, the real use case for cryptocurrencies is in countries where they have a central bank issued currency which isn't stable itself. So the example at the moment would be Venezuela. Imagine you were a citizen of Venezuela and you were using the Bolivar as your payment to make taxes and to live your life. Essentially, the system has completely broken down and people have resorted to a system of barter. So imagine each monthly paycheck where you receive your Bolivar, you convert it into cryptocurrencies. Cryptocurrencies are going to be far more stable than the Bolivar, as the Bolivar is pretty much has extraordinary amounts of inflation and just has no value. And on a third point that the Bank of International Settlements made was on trust. So cryptocurrencies is a different model than the central bank model. With the central bank model, you are essentially relying on the trust of the central banks and the faith of the central banks that the money in your pocket, the cash, the paper notes, has some value. And also they can print money at their own discretion. Every time the bank prints money, the money in your pocket actually loses value. So cryptocurrencies is a different model of trust. It's where you own your own private keys and you have a stake to your own property. So it's really a matter of opinion which system you want to trust in. Those who are buying into cryptocurrencies are essentially saying that they have more trust in a system where they own their private keys and they own their funds. And those that are buying into a central bank system are saying, okay, I'm willing to play in this game. I completely trust the central bank and the fate of their word, and they can print money at their own discretion, even if I lose value with the money in my pocket. So that's it. Let's wrap up for the video today. If you guys have any comments on the report released, if you guys think the market reacted in a really good way for this report being released, please share your comments and questions in the comment section, and also make sure to like and subscribe to the channel, guys, and we will see you